Matt, welcome to the show.
Thank you, Steve. Thanks for having me on, and thanks for the invite.
Yeah, well, this is going to be fun because you're one of a relatively small number of financial advisors that are investing in Bitcoin and other digital assets, and you have been for a long time. And I think you've flown a little bit under the radar. And I just became familiar with you here recently and saw some of the things that you've been doing and the long history that you have with Bitcoin. So I thought it'd be great to get you on the show. So why don't we start with you telling me a little bit about the background, your background, and how
Mhm.
did you originally get interested in Bitcoin?
Yeah. So personal, there's kind of two stories there: the personal journey, and then the professional side, and how we ended up at our firm allocating to digital assets. So personally, I became interested in Bitcoin in 2010 and was just reading about it. I can't remember the exact source, but was reading an article, and then got into just an online mining pool and was just kind of participating with it. And I just thought that the idea of what this is trying to solve is quite fascinating. PayPal had been in existence, obviously, and there had been other attempts at DigiCash and other attempts for people to transact value digitally and natively on the internet. But this is the first time that obviously there's a big breakthrough here with how they were doing the cryptographically sealed with the hash algorithms and solving the double spend problem, really. So that was a big advance. But obviously, I didn't at the time realize how big, of course, it would become. So I used that as kind of a base for myself personally to say, okay, this is interesting. I'm going to dabble with it a little bit. I opened a Mt. Gox account a couple years later, experimented with that. Was kind of testing the infrastructure, which was really terrible at the time. You had to move money into a service called Dwala and then move it to this exchange in Japan. And of course, we all know how that story ended, not well. That taught me a lot, though, about risk, for sure.
So
And
now,
then I
did you
kind of
lose?
took
Did you lose some money in Mt. Gox then?
I certainly did. I experienced the collapse and the subsequent um, uh, lawsuit and the potential settlement, and so that's still going on actually to this day, and that is almost 7 years later. So
Okay.
it's an
Now, one
experience I
thing,
still carry with me for sure.
yeah. So one thing I also find very fascinating about people like you who were exposed to Bitcoin early on, and a lot of people were, but
Hmm.
very few people took that initial exposure and actually followed through on it. So can you put yourself back in 2010? What do you think it was in your previous history, in your psychology, in your economic leanings or political leanings or whatever that made you say, okay, I see this thing. This is interesting. Now I'm going to get involved in a mining pool. So what was it about what you were thinking or your background or your raising that made you said, I'm going to follow through on this, unlike 99.9% of the other people who actually got familiar with it back then?
That's a good question. I've thought a lot about that. I'm originally from Alaska, so we tend to view the world very differently, kind of perched on the edge. I started college as a music major and then got really interested in monetary policy from a professor that talk about interest rates and and how the government can, what they were teaching us would dictate, through monetary and fiscal policy, interest rates and employment and all this other stuff. And the currency was at the root of all of that. And I just felt like that's a really interesting thing there. And I didn't fully grasp what that meant until, maybe fast forward 20 years to today. But so going back to even 2010, there was just something about it that felt right. Like there, we can communicate instantly, right? Emails, texts, that's been going on for a long time. But money, even back then, just took days to settle. In some cases, even in 2010, it took even a lot longer. So I was very fascinated by the concept of this instant settlement and instant transaction, or within 10 minutes, right, per the block. And to me, it's like, this is just the natural inclination of where money and technology are going to go together. I always used to tell my kids there's two industries that can grow quite exponentially: finance and technology, right? If you're going to go build another, a refinery, it's very capital intensive and you can't just push a button, right? I used to say that it doesn't cost Microsoft anything else to sell another copy of Windows, right? Somebody just downloads it. So, the combination of finance and technology it felt ripe for innovation. Obviously, looking back, it's pretty easy to see that. But, at the time, it was just felt kind of like the right next step. And I was like, this is really interesting. Whether or not it comes to, I didn't think it'd be this far where we are today in 2021, but it's quite fascinating. And then just following that journey of Bitcoin, and then hearing and seeing what people were saying about it, especially in the development community, the developer community, which is why Ethereum was launched, which I was like, that was another pivotal aha moment where this is where it really becomes programmable money, not just Bitcoin, but Ethereum. And I'm probably jumping the gun a little bit there, but that's kind of part of the process. And so I guess to your original question, right, as an advisor and as a fiduciary, it's like, I'm always intellectually curious for my clients. And so, and being, that's kind of at my core. And so I think I'm always open to new ideas and always looking for new ways to add value for folks. And so it started personally for sure. And we can get into how that intersected with the professional life in a bit.
And a lot of the early Bitcoiners came from either an Austrian economic perspective, or they were gold bugs, or they were libertarians, or they were all of those. So would you put yourself in any of those categories?
Not so, definitely not the gold bug. I was maybe fascinated. I do have a degree in economics, and the Austrian theories and were always pretty fascinating to me. The libertarian idea was interesting from the perspective of why does the government control the currency? Because that wasn't always the case. And that's more of there's been, governments have had different relationships with currencies. And it wasn't really until the Federal Reserve was created and really took control in the early 1900s. And so to me, that always felt like, okay, this is just another way for the government to kind of control things. And, it's done a lot of good for sure, but what are the limits of that? And so that to me is quite fascinating from that aspect. So if I was going to put myself into those camps, it'd be through those two lenses. But I don't identify, as really as just kind of using the lens of what a libertarian views a government, right? A more limited type of a government, and then just extending that down to the currency, and really just being like, well, why does the government control the currency? I was born in 1974, so I've always been right. The dollar is controlled by these, policymakers, and is it always need to be like that? Was it always like that? And the answer is no.
Right. Yeah. I mean, Bitcoin is really just separating money and state here, and you could argue all day whether that's good or bad. There might be some good, there might be some bad to it, but that's certainly an argument. And I think for a lot of people who are, I'll say, anti-Bitcoin, or who think Bitcoin is the end of society, they would, I think, would tend to feel that separating money from state is not a good idea. But again, that's an argument for another conversation. Right. So let's continue a little bit with your journey. So you're very early. I mean, 2010. I mean, that was, I think, there wasn't even a price with Bitcoin at some, I think it wasn't until sometime later in 2010 where the first price came out, and it was less than a penny. And up to that point, people were giving it away for free. So, gosh, if we could only go back to those days, knowing what we know now.
Yeah. So I followed it. I was introduced to it in 2010, and then 2011, I took a little bit of a break. My family and I moved internationally, which is a big adventure, obviously, and then kind of reconnected probably in 2012 and 2013. But just was always curious and always kind of following the story. And at the time, you'd have to go into chat rooms, or you'd have to go into different areas, and there would be an occasional story in the mainstream media. And it was all the FUD that you hear about today, right? The fear, uncertainty, and doubt. And back then it was real, right? Bitcoin is being used. Obviously, everybody knows the Silk Road story, and it was being used for a lot of illicit purposes that it is now really moved on from. But so it was just really curious, though, to watch that and to see this kind of bearer instrument, right, where you own the private keys and you can control this. And so that was always the interesting part about it for me.
And then when did this start intersecting with your clients? So you're a financial advisor. You've been a financial advisor for a long time. So when did you start thinking, okay, this is going to start moving from a personal interest to maybe this is something that might be of interest to my clients? And then, of course, we got all the compliance issues that revolve around that.
So right back in, I think it was 2012 or 2013, I was kind of the junior advisor at Arbor. And I said to the principals, I'm like, look, I think Bitcoin was like 25 cents or something is what they remember at the time. And I said, what do you guys think about this? Have a look. Maybe we should do this for our clients. And it was like, there's no way, right? There's no way we could have done that. I said, we could have, I think put it on a thumb drive, but then the auditors would come and look and be like, well, what are you guys doing? Like that would have been too much risk, I think. So it wasn't really until 2017, 2018, we were following as a firm. We still didn't have any exposure for clients, but we followed the ICO craze. We followed what was happening in the top of around, right around 20,000. And then after that we entered the crypto winter, we're like, okay, now they're starting to get some infrastructure built around this. Grayscale had been around. NYDIG was kind of making waves a little bit. And so in 2018, we said, how can we get our clients involved and exposed to Bitcoin? And so we started doing our research and due diligence, and we have an alternatives sleeve at our firm for clients. And I felt very strongly that it should belong in that asset class. And so in 2019 is when we took our first position for our clients in GBTC in March, in our alternative sleeve. And so that's when we first gained exposure for folks for digital assets.
So now how did you actually do that? So GBTC is a trust. So operationally, how did that work? Now you guys are an RIA, is that correct? So you have no broker dealer affiliation?
Correct.
Okay. So walk me through operationally how you actually use the GBTC trust.
Yeah, great question. So we started monitoring the GBTC trust, paying very close attention to the premium and the discount. Obviously, well, now it's at a discount. Back then, it was mostly at a premium. But Arbor works with people with $50,000, people with $5 million, and so we wanted a solution for all of our clients. So that kind of ruled out some of the hedge funds. It ruled out the private route through GBTC. So we ended up buying it on the public markets. And so we custody at Schwab. And so we just went, allocated it. We used Tamarack. We pushed the button, right? And we allocated about 15% of the 20% towards alternative, which is on the high end for folks. And that's how we allocated it. So it was really just going onto the open market and buying GBTC for folks and then allocate it into their sub accounts, into their IRA or into their taxable accounts.
Okay. So and then what kind of reception did you get with your clients? And did you have discretionary authority here? So you just did it, or did you prep everybody ahead of time that this is what we're thinking about doing?
So it's a good question. So over the prior couple of years, we had advanced our alternative portfolio, and it was always said we're going to invest in currencies and commodities and manage futures and things that normally fit into an alternative asset class. And we left it very open-ended with our clients, and we do have discretion. And so we did go in and purchase GBTC for them. We did talk to a lot of them ahead of time, and we got a lot of pushback. I've had many conversations with clients and other advisors about why Bitcoin, and it started 2.5 years ago. And so the feedback initially was kind of like, okay, but that's part of, as an advisor, right? You develop that trust over time. And so, which is really important. We take our fiduciary obligations and that trust that comes with that very seriously, and felt after doing all of our due diligence that on Bitcoin and why it made sense to have a small allocation in an alternatives portfolio for folks. They were really like, most people were like, yeah, that makes a lot of sense. There were maybe only 2 people that really questioned it, but nobody asked us to sell it even back then. So that's kind of been the journey for us with GBTC. And originally getting our clients exposure to digital assets.
And so back then, walk me through the math here in terms of the exposure. So I think it was part of your alternative sleeve, and it was a percentage of that sleeve. So ultimately, correct, like what percentage did your clients typically end up with in terms of owning Bitcoin?
Yeah, anywhere between 1 to 3.5 to 4 at the most of their liquid portfolio. And some people didn't get any if they didn't have an alternative, if they didn't have alternatives built into their portfolio. So that's where we started. And that's where, and really for the more aggressive folks, obviously that was on the higher end, the 3 to 4. So that's how we allocated it. And then And we've obviously the timing was, I mean, it was fantastic. They had a very good experience, and we've managed the allocations very tightly. And obviously, the volatility has been actually a friend to us, because we do rebalance periodically. And so as it would rise up, we would just sell it back. And then, a year, last year, we were able to as it fell back down to 4,000, we were able to reallocate to it. So and bring it back up to the model weight. So it's been, that
So
volatility has actually helped quite a bit.
they're probably pretty happy with you, I would imagine.
So the folks that were initially skeptical, were now saying, okay, this does make sense. And now, seeing the price of where it's gone now, and it makes the conversation to diversify beyond Bitcoin even easier, because they've seen what this does. They've seen us talk about it, and now they're starting to see it in the public, right? It's not just some, okay, there's the crazy advisor that they trust, telling them about it. It's getting a lot of national news. And so to continue that journey, last year, we wanted to get exposure to, beyond just Bitcoin. We wanted to diversify it further. And at that point, again, we wanted it to be for everybody. We did have conversations with hedge funds and different folks, but we wanted it just, more, not just for qualified and accredited investors. And we wanted to add Ethereum, but at the time, the premiums on Ethereum trust were 1 to 2 to 300%, depending on any given day. And that was too much to stomach. And so I was on the phone with Coinbase. I was on the phone with Fidelity. I was just kind of scouring the market, looking for a solution where we could offer, digital assets in a sub account for our own clients, which is when I stumbled across in August last year, an article about BlockChange and Gemini developing a platform to do just that. And so that, I was really excited when I found that, because I've been searching for a while and I just kept running into roadblocks. And then from there, we did a fair amount of more compliance work, because that's a different entity, right? Owning GBTC and owning the trust is, there's certain compliance concerns there, but this is very different. Opening a client account on an exchange that technically, per the SEC, right, doesn't necessarily deem them as a qualified custodian under the Investment Management Act of 1940, but they've kind of moved on from that, and they're now saying, okay, Mr. and Mrs. Advisor, you can, but you better have really good reasons and do your homework. And so we've spent a lot of months doing compliance work that honestly still ongoing to this day. And so in Q4, we started onboarding our first clients into the Gemini, onto the Gemini platform through BlockChange. And so that is, we're having individual discussions with everybody on that front, because they have to open an account and they have to wire the money over. And so it's a little bit of a process involved, but having the history certainly helped. Having them have exposure to Bitcoin already, where some clients even went out and got so excited and started their own Coinbase accounts or Poloniex accounts before that got shut down in the US. So that was, it was an interesting conversation today. And now what we're saying is, we've had Bitcoin, and now if you want us to professionally manage your digital assets, we have solutions for that now. And so that's been a lot of fun for our clients to be able to have that exposure.
Well, I want to talk about why you diversified beyond Bitcoin, because there's people out there, Bitcoin maximalists, who would say there's nothing but Bitcoin, right, and everything else is an altcoin or something worse than that coin.
Yes.
But before we get to that, I want to ask about BlockChange. So tell me who and what BlockChange is, and Gemini, what Gemini is, and tell me about the triumvirate here between what you do, what BlockChange does, what Gemini does, and maybe the fourth piece, how the client interfaces with all of that.
Right.
And what are the pieces within the existing financial advisor tech stack ecosystem that help put all of that together. So I guess I'm trying to get granular here on the operational aspect of how this all works.
Yeah, that's a very good question. So Gemini obviously is the custodian, and so that is where the assets are going to be held. BlockChange is a technology partner that integrates with Gemini, and they facilitate the account opening process. They facilitate the portfolio management as well as the model creation. And so I use the analogy, right? We custody most of our assets at Schwab. So Gemini is our Schwab. We use Tamarack for rebalancing reporting. BlockChange is kind of like the Tamarack version of this. And so that's how the three different kind of triumvirate of Arbor, and how we interface with BlockChange, and how we interface with Gemini. Now, you bring up another very good point, as how does this connect currently to most advisory business tech stacks? And the answer is it's being developed right now. So when we onboarded, there was no integration into our portfolio accounting software systems. We're working, in fact, I have a call later today with to sort to try to make further inroads with other firms to do this, so they can connect to things like Bile accounts or Advent, right, where they're used to that. And so we've had conversations with both of those companies, and for them, they're like, okay, they're starting to see that we need to go build this, because that is important, right? For advisors, they want to be able to report on this. They want to be able to show their clients everything that they can, just like they do with their traditional portfolios. So that is a journey. And so, that's an important word in this space, not just for clients, but for the other advisors we're talking to. We said, you're coming on a journey with us and with BlockChange and with Gemini, because we're literally building the infrastructure and the rails right now to connect to the way that RIAs do and have managed their businesses for the last 20 years. And so that can be a roadblock for some people, but we decided, let's just push on. It's that important for us we feel, for our clients to have exposure to these asset classes.
So it sounds like you're refueling the airplane in midair with this.
Yeah, it's interesting working with BlockChange, because they're a tech company, and so that's exactly the analogy they use. Like, we're doing this, and we're going to add the features and the capabilities of ACH and all these other things that we're used to coming later this year. But what was most important, what is functional now, is the clients can have a sub account and we can manage it and rebalance the portfolios. That's live and has been for several quarters now.
So how prescient was BlockChange? So tell me more about who this company is, who's behind it, how legitimate is it? Because for them to realize that financial advisors someday were going to be using this and that they needed to have the interface with it, how did that all come about?
So yeah, that's a good question, and I'll share what I know of their story so far. So I've gotten to know, obviously the couple of the partners very well at BlockChange, because they had roots in the traditional space. Some worked at Anaplan. One of them worked at a hedge fund, and so they set off on their journey a couple of years ago, and have pivoted to some degree. But at the end of the day, I think their vision was to build a solution for advisors to invest, for their clients in digital assets. So they are a private company and are based I believe in San Francisco, and feel really good working with them. We did our own due diligence on them, did some background checks and everything like that. And so they were on the journey as well, and had been talking to some of the same folks I was. And then Gemini was the one that said, yeah, okay, we'll work with you guys to get this infrastructure built. And so that's been their main focus, is literally building that tech infrastructure. But their roots are in financial services and technology. And so they're in the right spot.
So let's say I'm a client of your firm, and you've allocated Bitcoin in my account. What am I going to log into to be able to see my Bitcoin or see the value? I'm not going to see my Bitcoin, but I'm going to see a representation of my Bitcoin in terms of how much it's worth. So what am I logging into?
Well, you're not logging into anything yet. And so that is one of the development rollouts that's coming hopefully this quarter. And so there's two approaches. One, where the client will be able to log into Gemini, or they'll be able to log into BlockChange, or both. And so both of those are getting built out right now. And that's why I said it. This is a journey, and we've set that expectation with our clients. Like, you will not be able to log in. I can pull reports and email them to you, but the way that the tech stack was built internally in Gemini, and I don't need to get into the details, right? But right now, like, the login is used by Arbor, right? And so the sub accounts for the clients, they don't have that yet, but it is coming. And so that is what we're telling folks. And so it's interesting you bring that up, because we were literally just emailing yesterday with some clients that we want to know and they're very excited, like, what's going on in these portfolios? How can we see them? And we said, we just need your patience, and I understand. Here's the current statements, and that's how we're managing that right now. But it is coming, and we do anticipate not only full reporting, but client accessibility as well within the next couple months.
That takes a huge amount of trust. if the clients don't have a place to log in and
Yep.
see what their value is, and they're relying, so
Yep.
they're relying on your firm to send them a
Correct.
statement, or are you pulling a statement from Gemini that's on Gemini letterhead, let's say, as opposed to something that's coming from Arbor directly? What does that look like?
So the regular, right. So there's two things there. One is what can we send them as an advisor? And so that's always been there. We can send these reports and pull those, on demand. Gemini does obviously satisfy the custodial obligation to email the clients and provide a statement every quarter. So that is getting done direct from Gemini to the end client. I don't touch it. BlockChange doesn't touch it, right? So we can't tamper with that. So the clients do have that. But right now, you're exactly right. This is why I mentioned the trust is such an important part of this. And for our clients having the exposure to Bitcoin over the last couple of years and being able to trust us, we are able to do this and said, and that's why I've said this is an adventure. If you say no, we totally understand, but we're not, this isn't something we're saying, everybody go open the accounts right now. We're having the conversation with everybody. So this is what the current setup is. You will not be able to log in now. Gemini and BlockChange are working on accessibility for you, but I'm not a developer. And so we trust them to build that infrastructure. So yeah, it is a big lift for sure, for the clients, but we've earned that trust over time just based on, not just with Bitcoin, but just being an advisor that we just be ourselves, right? Put our clients' best interests at heart. That's really what's been driving us to invest in digital assets, because we felt that it was so important. But yeah, I'm really excited for when we are able to not only integrate that with our own accounting systems, but give the clients access either through the BlockChange or through Gemini, so they can log in and see, which does create other questions, right? Can they go in? Should we enable trading for them, right? Should we enable all this? So it brings up a whole nother level of issues.
And then how do you get paid on this?
We're charging a flat fee, 1% for that. And BlockChange has built the integrations for fee deductions into Gemini. And so that's how all that is going to work. We actually haven't done it yet. We're targeting the first billing cycle in May. And so we have not actually charged the clients yet, but that is coming.
So for the past 2 years that you've had clients invested in Bitcoin, you guys have not been paid on those assets, or?
No, just the account, just the assets in Gemini and BlockChange. We have been billing on the GBTC position for sure. So that has been for the last 2 years, 2.5 years.
Okay.
But
And then
what's new is Gemini, right? So we opened those. We did some testing back in October and November, and then started onboarding clients in December. So from December until now, no, we have not billed on those assets yet.
And then when you do start billing, how do you envision doing that? Meaning, are you going to bill in arrears based on the previous quarter end or the average balance during the month, or how are you thinking about calculating the fee?
Yeah, it's a good question. So it's a daily average in arrears, and so that's the methodology that we're going to use for the billing purposes, because obviously they're very volatile, right? So if you pick a Q end, who knows where the prices are going to be? They could be 50% higher or lower than they were, a week before. So we're doing an average pricing over the quarter.
Okay. Now, I also want to talk about Bitcoin versus other altcoins. So you started out Bitcoin, and now it sounds like you're allocating to other coins, Ethereum, and maybe some other stuff too. So tell me your thought process behind moving beyond just Bitcoin.
Well, it comes down to diversification, right? As advisors, that's what we like to do, and so Bitcoin is great, and still a long-term believer. I'll say this: I'm probably a recovering Bitcoin maximalist. I heard that on a term used a couple of years ago. I was like, I like that one. Yeah, and there are obviously still a lot of Bitcoin maximalists out there in social media and in the world. For me, Ethereum was more about the technology and being the world's computer and what that is. And so, not just for Bitcoin and Ethereum, but for these other protocols. And yes, some of them did have choice names, and a lot of them well deserved. Right, there were certainly a lot of Ponzi schemes in 2017, and to this day, we have to be very, very careful with what we're allocating towards. But one of the things that we're paying attention to is what we call use case evolution, right? Bitcoin's use cases continue to evolve. Ethereum's use cases continue to evolve as well. And so when I think about what that means from a portfolio perspective, we want to have exposure to Bitcoin. We want to have exposure to Ethereum. But what Ethereum is enabling is an entire new infrastructure to be built on top of it. With this ERC20 tokens and the DeFi space is really just being built on top of the Ethereum network. And so we wanted to have exposure to some of the decentralized financial tokens. And that really was kind of what got us so excited when we found BlockChange and Gemini, because they're actually enabling us to create portfolios and to manage these assets for our clients. And then the next, we have kind of three portfolios. We have Bitcoin, Ethereum, and a DeFi, and then we also have a utility token, which encompasses more things that people can interact with, that, whether it's a web browser or a VPN or a game. It doesn't necessarily need to be running on the Ethereum network, and it has its own blockchain. And that's interesting because, obviously the NFT craze kind of, hit earlier this year. That's kind of a natural extension of this utility idea of utility tokens. So that's what's led us to move beyond just Bitcoin. It started with diversification, but it said Bitcoin's just one asset, right? This is technology that is going to evolve really rapidly, and we've seen this in the traditional world, like, with how the tech sector has just overtaken everything, and now it's got split a couple of years ago, right? So now we've got another subsector in the S&P 500. And technology is eating everything. Software is eating everything. And so this is just a natural extension of that. And when you look at the efficiencies that this can bring to an antiquated financial system, it's really compelling. And having exposure to these assets is really what's driving this.
Now, a lot of financial professionals have not gotten involved with these digital assets for a number of reasons. One of which is they don't know how to value them. So again, you've been in this business a long time. You've done a lot of due diligence in here.
Mm-hmm.
How do you know if a $60,000 price for Bitcoin or a $10 price for Bitcoin or a $1 million price for Bitcoin is an appropriate price? It's undervalued, it's overvalued. How do you think about the value of, let's just start with Bitcoin?
Yeah, that's a very good question. So the valuation, the traditional valuation metrics, you just kind of have to take them and kind of push them aside because they are irrelevant to this asset class, which is why I think it's a hard time. A lot of folks in our industry have a hard time kind of saying, well, there's no, priced earnings, there's no this, there's no that. Well, there isn't, because these are networks, right? These are different. There's very different valuation metrics and methodologies that we're paying attention to that have literally almost, nothing to do with the traditional world, except maybe some of the companies like Amazon and things like that are, and Google, that are literally, kind of following the same path. So we start with looking with the base layer, right? This comes down to Moore's law and Metcalfe's law, and this intersection of where does value accrue when you apply those two things together, right? And so when we look at the metrics, when we start digging into that, we've got on-chain and off-chain metrics. We're using, looking at the developers, lines of code created, lines of code removed, the Reddit follow. I mean, we're literally looking at what is going to drive the value of the network. And literally it's just people being involved in interacting with it. At the end of the day, that's what it comes down to. One of the other things that we really pay attention to is total market capitalization, which that is something that's relevant, right? When you see Coinbase get launched, and then you see these distributed exchanges or DEXs trading at a not similar, but a fractional market cap of, so let's say a Coinbase, you can kind of get a sense of the perspective of where things are. Total locked value, right? That's another big metric that we use when we're looking at DeFi. It's how
Man, I think we got a bad internet connection here.
terms is locked into these smart contracts that are then
Matt,
trading onto the system. And so
Matt,
they go
Matt,
deep into.
hey, Matt, can you hear me? I lost you after you said we've got like 80 billion locked in DeFi.
Okay.
Kind of lost your internet connection. So if you want to start over on that part.
Okay. So yeah, sorry about that. So one of the other metrics is total locked value in DeFi, and that is how much in dollar terms is locked into the smart contracts on these exchanges. And so that gives us a good understanding of adoption of how people are using these different exchanges and automated market makers. So that those very different metrics that we're applying. And one of the really cool things about this asset class is the whole nature of everybody in it. It's open source, right? There's hedge funds that are specializing in digital assets, and so we get to join their investment committee discussions, and literally they're saying,
Oh, I'm losing you again here.
nobody's an expert in this space. We're all learning. Oh no.
Yeah, I lost you again when you said about 15 seconds ago. So I don't know if I'm direct connected to the internet here, so I'm not sure what, are you on Wi-Fi there? Or?
I am, but and all the other, never had this issue before. I wonder what's going on.
Well, yeah, I was starting to hear a little bit of it throughout our conversation, but it wasn't until just a few minutes ago that it actually stopped in between here.
Really?
Yeah. Well, let's.
How do you want to proceed?
Let's just keep going and just see if it sort of works itself out here. And
can I take a 30-second pause real quick to check something?
Sure.
I'll be right back.
Okay, we're rolling again.
So one of the main metrics we use, particularly in DeFi, is total locked value, and that gives us an understanding of how much money is being used in these exchanges and is locked in the smart contracts. And so that is a really good tool. And that's been growing dramatically, right? I think it was a couple billion a year ago. Now it's hitting like 50 to 60. So one of the other things that that is really cool about this asset class is that it's open sourced. And so what I mean by that is all of the advisors we're talking to, even some of the hedge funds, everybody's sharing information, and we're getting invited into investment committee meetings with hedge funds and literally having discussions about some of these protocols, talking about Wi-Fi or Aave, and really getting into the weeds and saying, what are you guys seeing and how, and what are you saying? And so it's really sharing, and it's about it being open source, which is very different from traditional kind of zero-sum game, Wall Street kind of approach. And so the spirit of the asset class is really interesting right now.
Yeah, and I think one of the keys that you talked about there is Metcalfe's law, which is essentially network effects. And that is something that I think a lot of people have a hard time wrapping their heads around. So if you look at Facebook, if you look at Google, if you look at Amazon, I mean, these are all companies that were essentially made possible because of the internet and because of the ability to benefit from network effects. And the marginal cost of adding one more user to Facebook is zero, essentially. And it's kind of the same thing with Bitcoin and with these digital assets. And so I think that's the tricky part. And I think you were just describing here, well, how do we think about trying to value network effects? And if you look going forward, the most successful, quote, companies or digital protocols are going to be the ones that have the biggest benefit from the network effects. And I think as soon as financial advisors can start wrapping their heads around this idea of network effects and trying to understand that and realizing that the most successful companies are going to be the ones that have the least amount of assets. It's not the General Motors that has all these big plants and equipment and is spending billions of dollars. It's the ones that are asset light and that benefit from the technology and from the digitization of everything. You mentioned software is eating the world. From Mark Andreessen back in probably 2011, I think he wrote that in the Wall Street Journal. So this has been going on for years now, and it's not stopping. I mean, you can't put the genie back in the bottle. So I think this is such an important point for people to really understand.
Yeah, it is. And Yeah, I heard Rick Edelman say it one time. He's if you are a financial advisor and you've been working in the space for 20 or 30 or 40 years, and everything you've been taught, and all the infrastructure and all that knowledge you have is like, this is coming after that. And you have to be open-minded. Otherwise, you're going to be at a disadvantage to understanding this. And that's one of the issues with some of the traditional methodologies and the traditional metrics, right? Technology is not going to mean revert back to, oh, it's going to go back down to 15% of, its historical place in the S&P. That's not happening, right? And so this is like you said, it's unstoppable. The genie is out of the bottle, and how people, advisors, choose to interface and interact with it is interesting. And so we're having a lot of conversations right now with a lot of different advisors about this topic exactly.
Yeah, and it's really a complete shift in thinking here. And like you just said here, if you spent 20 or 30 years in this business and you've been trained on discounted cash flow analysis, it's like, well, it's always worked for me in the past. So what makes me think it's going to change now? Well, I think what's changed is digital technology, and that is changing everything. I mean, it's like the invention of electricity. It just changed everything. It becomes a fundamental new thing upon which so many other things get built. And I think the sooner more people can understand the shift that's happening as a result of this digitization of everything, the sooner you're going to come to the realization that the way that we used to value things is changing. And I think when you layer on top of that a generational change as well. So I'm a young baby boomer, and I've got 3 millennial kids, one of whom kind of borders on a Gen Z, maybe identifies as a Gen Z. But I feel like I've kind of seen it from both ends. So I've grown up as a boomer, but then I've also seen my kids grow up in to some extent as more digital natives. And, I like to think that I'm someone who's very open-minded. And I think for the most part, I have been in terms of this new technology. And that's why I've got a podcast like this, because this is as much a journey for me as it is for everyone else. And by having conversations with people like you that have been on this journey for a long time and who have that open mind and are pioneering this area, I think is fantastic. So I think it's a complete mind shift. It's just being open to the idea that the future is going to be very different from the past. And as soon as we can wrap our heads around that, the better.
And it's accelerating even faster than most people are realizing to the Moore's law, Metcalfe's law, and all the other things. Share a story. I have 2 kids. I have a 17-year-old, and about 3 years ago, or maybe less than that, he was playing Fortnite and playing these games, and comes home from school. And I'm like, hey, what's going on? He's like, oh, I'm going to jump on. I'm like, well, get your homework done. He's like, well, there's a concert happening. I'm like, what are you talking about? He's like, yeah, the Marshmallow is going to perform in the Fortnite game. I was like, what are you talking about? And he's like, yeah, so all of our friends are going to get in there. And then, you get these digital tokens, you get these currencies, and you get all this other stuff. I'm like, to your point, they're going to interact with digital media, everything in a completely different way. And that was kind of a pivotal moment for me, just going, oh, we're not going to go down to the arts center and watch the community symphony play. It's like they're doing things completely different. And then COVID happens, right? And so now everybody is online watching things digitally. And so it just accelerated all that. But yeah, being part of my fiduciary duty to me is being open-minded and carrying that with me, and always looking for new opportunities for clients, new ways to add value to them, and not just saying, well, here's the sandbox, here's the traditional 60-40, whatever, and you got to do these passive index funds and move on and be done with it. That worked for a while. But if you can't just focus on what's worked in the past, or things are going to get moved on from, for sure.
Yeah. And I'm glad that you mentioned the video games. And I mean, I'm going to date myself here, but I used to play Pong. I mean, from Nolan Bushnell, when Pong was a thing and Atari was a thing back in the 1970s, and that was state of the art. But I totally missed the whole Fortnite and all that. Cause again, I've got 3 daughters, and they were not into video games. And so I really missed the whole video thing. And I think that was an important part of shaping the millennial generation and the Gen Z. Is I've got nephews who spend a lot of time with their headsets on, they're on Fortnite in these different areas, and that's their social life. And if you can understand that ethos and that environment that those people grew up in, that's going to help you figure out where's all of this heading. And so
Yeah.
I think another area that we all need to be thinking about is virtual reality, augmented reality,
Hmm.
that a lot of that's been in development for many, many years. But now I think we're finally getting to the point where we've got the headsets, we've got the technology that doesn't make you dizzy like it did back in the early days. And as we think about NFTs and meta universes and those types of things, again, this is where these things are heading. And I think it's important for people to devote a little bit of time to learning about these, to trying these things, to buy a VR headset and check it out. I mean, I've done that, and it's just crazy the stuff that's happening here. But if you can be on the front edge of this, I'm not saying you have to be on the bleeding edge, but if you can be on the front edge, and you mentioned that you view this as your fiduciary duty to stay on top of this, I think that is so on point, that if you're going to do what's in the best interest of your clients, you need to be leading them. You need to be out there yourself. You need to be investing in this stuff yourself, because the best way to understand the future is to really invest in it. Do it personally first, get yourself educated, just exactly like you did. You know, you bought Bitcoin, and that got you going down the rabbit hole to really trying to understand this. And then when it sounds like when you felt like it was developed enough that it would start to make sense for clients, then that's when you continued your due diligence and found reputable places to get your clients involved in that. So I love the whole step-by-step process that you've taken here, and the big picture view that you have about trying to put all of this in perspective and try and understand, where is this all heading? How can I be on the front edge of this? And then how can I slowly get my clients involved enough that it is material, where it could have a very positive impact, but not so much that if I'm totally wrong in all of this and it goes to zero, that they're screwed.
Yeah, that's well put. Yeah, that's the approach that we've taken. And again, the how technology, right? If we just look at how technology has taken over, and even in the financial world, right? And look at the size of these companies and where the value is accruing. This to me is the next evolution of that, right? It's being built on top of the internet. And so there's a lot, we don't need to get into it here, about DAOs and different organizational structures that are literally being built on the internet, and how value accrual by owning a token is going to be very different than interacting with Amazon or interacting with Google, right? They control all of that data, and they benefit from selling that data. And so, which is great if you're a shareholder. Maybe it's not so good if you have privacy concerns like they do, with some of the things that are happening in Europe and how they're approaching these things. But yeah, you're right. See, we have to be thinking about what's next for our clients and how to protect them. And one of the things that we haven't talked about, but to me, when we look at this financial infrastructure that's been built in the United States and in other parts of the world, right? What is the base layer of unit of account, right? It's the dollar. Everything is priced in dollars. Every risk metric goes back to dollars and how they interact with each other. And two things, when we're talking to other advisors, one of them that's natural, that is completely disruptive, is zero interest rates, right? What are you doing with bonds? What are you doing? There's 17, $18 trillion worth of negative yielding debt in the world. That blows up every traditional financial model, right? Dividend discount. Well, what interest rate should we plug into that model? -1? Okay, well, what's the outcome? It's like garbage, kind of. So that is one thing that's dislocating everything. And it's just a tailwind for acceleration into other things when you have the dollar or the euro as the base layer. And not only with zero negative interest rates, and I'm not making any political statements, but with the amount of dollars and euros that are being created, we have to think about what that's going to mean for our portfolios, right? So it's not just the technology side, it's taking what this sandbox and playground that we've had and it's been built, and what's happening in the last few years to the base layer unit of account, the dollar and the euro and the yen and everything. That's real. And we need to be considering how we're going to be positioning our clients. And in a lot of conversations, advisors will talk, well, what do we do with bonds? And we have to kind of get creative, and we have to do different things. And that's the right way to approach it. But I've been pushing, is that enough, right? What else do we need to be considering when, you know, the dollars that you have in your safe portfolio are losing purchasing power in a big way every year. And I know we talk about inflation, we talk about those things with clients, but, you know, I'm not, you know, one of the interesting things that I'm not advocating for, you know, taking a page out of Michael Saylor's playbook in terms of leveraging up and buying Bitcoin. But what he said, there's another, you know, pivotal moment for, I think, for myself and even some other advisors, when he's saying, I've got $500 million in the bank account, right? I'm going to be spending on developers and real estate over the next 3 years. That's losing literally, you know, the inflation rate of the developer you know, wage is not 1 or 2%. It's like 15. So the people that I got to hire in 3 years, that 350 or that, you know, that 500,000 is now 350,000. So I'm losing, and he used the analogy of it's an ice cube melting, right? And as fiduciaries, this is something we talk about internally all the time, right? We're not going to get in trouble if we don't lose money, right? You got $100,000 and in 3 years, your CD is now $101,000. Okay. That's great. But what did you lose in terms of purchasing power? So the entire regulatory infrastructure, not only is it even the underlying financial model, it's all based on not losing money, right? And risk. And so that comes back to that base layer unit of account. I'm probably getting into a little bit into the weeds here, but I'm pretty passionate about how we communicate as advisors to other advisors and even to our end clients about what that means. And you know, so those are the two big things: the technology piece that we've been talking about, and then as advisors, this zero interest rate environment, and, you know, massive amounts of dollars and euros and yen and everything that's getting pushed at us, and the economies, and what does that mean for simple portfolio construction. So that's the approach that we're taking. That's what's led us to this digital asset journey. Again, it's in the context of what is an appropriate allocation in our ADVs, which everybody can see, right? This is a speculative asset class, and we need to keep that in mind because it's going to evolve and grow and change, and regulators are going to weigh in, and we hope they do at some point. But that's the approach that we're taking from those two angles.
Yeah. So if you go back to 1982, August of 1982, and I remember this as clear as day, when what I would say the bull market started, and to me, it's been one continuous bull market, August of 1982 to the present. And sure, we had October of 1987. We've had declines of 30 or 40 or 50%, but those, you look at those on a chart and they don't even show up on a chart.
They're blips.
And they didn't last very long. So I would argue we have been in a equities bull market since 1982. We've been in a bond bull market since about 1982, as we went from 15, 16, 17% interest rates down to 0.5%. And now we're at whatever, 1.5%. Anyway, so almost every single financial advisor that is in business today has been in business since there were twin bull markets in equities and fixed income. And what I hear you saying, and I agree 100% with this, is I don't think we can continue to rely on equity and fixed income as the two pillars that are going to be the bedrock of every financial advisor's portfolio. Equities probably will continue to go up over time. I don't really doubt that. Fixed income, who knows what's going to happen to fixed income. But I think the other thing that you were saying there is that as governments continue to print more money, and Raoul Pal from Real Vision talks a lot about this, and I don't know if he really came up with this first or whoever did, but the idea that as the government continues to print more money and it's increasing the denominator of our base of money, then as we think about as individuals, our like percentage ownership of all the money that's out there keeps declining. So if the government increases the money supply by 15% per year, talking about Saylor's melting ice cube, is our income, is our net worth increasing by 15% per year, just so that we can stay even? And I think all of us have to become essentially macro investors. We can't just limit ourselves to equities and fixed income. We've got to be looking at these digital assets. We've got to be looking at a whole broad range of assets, whether it's real estate, whether it's art. I mean, and there's going to be all kinds of new assets that digitization creates for us, that if we just allow ourselves to be open to the idea that there's a broader range out there, I think that's what's going to be the key. So for me personally, this stuff is just amazingly fascinating to me. And Bitcoin was this, I didn't coin it, but it's a gateway drug into all of these other areas. And so once you go in at the top of the funnel and you start realizing it's like an inverse funnel. If this is the top of the funnel into Bitcoin, it doesn't narrow. It kind of goes like this. Bitcoin, it's narrow at the top,
Yeah.
and you start digging in, and it goes this like this. And to me, that's what I find fascinating. And I'm like a kid in a candy store, if you can't tell.
I'm more excited about this asset class than about anything in the 20 years. And in terms of assets, right? In terms of where can we allocate client dollars? I've been more excited about this. We didn't really even talk about tokenization, but you saw earlier, it was this week, Binance, right? They launched the first tokenized share of Tesla. Who knows? But that's not in the US, and I'm certainly not advocating, but that's coming to this country, whether we're ready for it or not, right? That tokenization of everything. You talk about art and wine and different ways that people can get exposure to that. And a tokenized version of that is probably going to be the most efficient way for that to get done.
Yeah. And the whole token thing. I mean, I guess it's even here today, but it's not widely popular yet. But just this idea that you can create tokens of people from the standpoint that if I want to invest in a sports figure, or I want to invest in a high school student who I think has great promise, and I'm willing to invest in their token. And as a result of me owning that token, I'm entitled to X% of their income for the next 10 years. So maybe that's a way for kids to pay for college or school or whatever. But just this idea that you can actually invest in people through a blockchain and having a token, to me, it's unlimited what can happen here. We're only limited by our imagination.
That's true. And yeah, it's changing. It's changing the world for sure. And this goes back to the layering, right? Moore's law, and then you layer on Metcalfe's law, and then what efficiencies can we gain from those things? And yeah, there have been reading about, like you said, people tokenizing themselves, and or investing in a sports contract with somebody, right? In a tokenized platform. Real estate, that's getting done right now in the tokenized world. The St. Regis hotel in, I think, Vail did that last year. And there's been apartment buildings in New York that have done this. So where you can go and purchase a small interest in a otherwise previously inaccessible asset class. So that's what's really exciting about the space, is the accessibility of it, the democratization of it, being for people to be able to interact with assets in new ways that they were kind of closed off from either regulatory reasons or for financial reasons, right? Sometimes it didn't make sense from the efficiencies or economies of scale for a real estate, product company, whatever, to, offer, $1,000 chunks. It used to be, 10 or 50 or 100,000, whatever. So it's really exciting. And paying attention as advisors, right? You need to be thinking about what's next and how do I incorporate these things into my practice, because we're talking to other advisors, right? We have an SMA and we're marketing this to other advisors, and they're asking us, how do we talk to folks? Or they're reporting back to us and saying, their nephews and their grandkids are bringing it. Like you and I talked about our kids earlier. It's like people are asking other advisors about Bitcoin. And so, one of the things we're always saying is have an opinion, right? Start to educate yourself about it, because it's going to come. And in 2020, right, Bitcoin kind of grew up and went mainstream with all these adoptions from Paul Tudor Jones, Michael Saylor, right? All the insurance companies getting involved. I could talk about use case evolution, right? Now it's a treasury asset. Who knows what it's going to be next in the next 3 to 5 years, Bitcoin or any of these, right? It's going to continue to evolve. And if technology has taught us anything, right, it's going to create more efficiencies, and it's going to pull people and markets in new and unexpected ways. And we just have to be prepared for that.
Now, did you guys create a separate division here to offer this? And do you have some kind of offering for other financial advisors if they want to get into this?
Yeah, so Arbor, Arbor Capital Management is a RIA based in Alaska. It's SEC registered. We have about $280 million. And so what our journey, 280 million in AUM. So what happened last year was I talked about GBTC and our experience with that. And then we said, okay, we want to find other ways to get exposure to other digital assets. And so that brings in BlockChange and Gemini. And so we were great. We're onboarding our own clients, and that's when we kind of hit the pause button. And in discussions with Gemini and BlockChange, they said a lot of advisors don't necessarily have your journey or your expertise in this space. So why don't we go and, create kind of an SMA and focus on that for a bit? And I said, okay, that's a really cool idea. Let me hit pause. Let me go back to the team and say, this is a different business venture. Should we do this? And we all felt very strongly that yes, this is something. So we've staffed up, we've committed resources to it. But then we launched what's called Arbor Digital, which is a division of Arbor. So Arbor Capital carries all the registrations, but we're now have a separate division that is focusing on digital assets. And we are marketing ourselves to individuals, to other advisors. So if you're an advisory firm and you're interested in getting digital asset exposure for your clients, that we have a solution for that now through Gemini and through BlockChange. So we manage it. We've got a team that is putting these portfolios, put the portfolios together. We're actively managing this. We can use IRAs, we can use taxable accounts, right? It's pretty much whatever you can do at a traditional brokerage company now you can do, or traditional custodian, we can do now at Gemini for our clients, which is real. I'm really excited. When I found that solution last year, I was like, oh my gosh, my wife's like, are you okay? But yes, I went down the rabbit hole deep, even further.
Yeah.
So this is that intersection of personal passion and professional journey, which it's created a lot of fun and a lot of energy in our, and so we are now taking that and going national with it and starting to talk to everybody about what we're doing.
So I asked this earlier about how do you get paid on the digital assets? So now with Arbor Digital, how does another financial advisor, if they want to work with you and let you handle all the logistics of the management of the portfolio and everything, how does that advisor get paid on that?
That's a good question. So whatever they want to charge to have us manage it, that they can we can have that discussion with them. So we literally yesterday just got a authorization to move forward with our first SMA client, which is really exciting. And so now we're having the discussions of what our fees are and what their fees are. So and then going from there. And so that would get done through the Gemini account. And so there would be, the fees would get billed, and then they would get, the other advisor can connect into Gemini, and they would get sent back to wherever, corporate account that they wanted to have those funds flow to.
Excellent. All right. Well, Matt, there's a lot of other topics we could go into. Maybe we'll have to do another show here, but is there anything else here that you want to mention or talk about here before we wrap up?
No, Steve, I think just what I said earlier is that one of the few things I feel most passionate about as a fiduciary is, being open-minded and looking at the landscape of what's available, not just through the lenses that we talked about with low interest rates, but being open to the technology shift that's going to come. And it's going to come and disrupt our industry, not just from the investment side, but from an advisory side and from a custodian side, from the technology side. It's coming. So I want to thank you for inviting me on. It's been a lot of fun.
Yeah. So what's the best way for folks to connect with you if they want to reach out and learn more about what you're doing?
Yeah. You can reach me directly. You can go to our website, digital.arbor.capital. And you can do an information sheet there that'll come through right to our team. I'm on Twitter. It's Kolesky if you wanted to hit up me there, or on LinkedIn as well. So, and then our parent company is acminc.com. And so if you wanted to look more about the traditional Arbor side, we've got a presence there as well.
Excellent. All right, Matt. Well, this has been great. I appreciate it. And thank you for sharing your Bitcoin journey here and all the things that you and the team are doing there at Arbor. So I really appreciate it.
Thanks, Steve. It's been a pleasure.